Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July 12th, CPI day, and oh boy, we got it. Inflation rate month over month, general inflation for June came a tick lower than expected. We were expecting 0.3% and we got month over month 0.2%, a tick higher than the previous one, month over month. But year over year, 3% instead of the 4% the previous one, and we were expecting 3.1, so better than expected. But remember that year over year we are getting rid of those huge April, May, June months of pretty high inflation last year. So when those months came out of the calculation, obviously, year over year, we are going to see huge decreases, but that doesn't mean that inflation is under control. We need to focus on month-over-month readings, and more than that, core inflation month-over-month readings. Core inflation month-over-month came a tick lower than expected. We were expecting 3.3%, and we got 0.2%. Coming from the 0.4% is a step in the right direction, and year over year we are also in the right direction. 5% expecting, 5.3 the previous one, and we got 4.8 for a CPI overall of 305. So overall, pretty decent inflation data, but we need to go to the details. And when we see the details, overall energy came 0.6%, a little bit higher than expected and coming from the minus 3.6 on May. Highlighting fuel oil minus 0.4% and the 1.7 on the utility gas services. So pretty much under control. But as always, core inflation and more than that, services is what the Fed is seeing, is what the Fed is focusing. 0.4, 0.4, 0.4 in May, and 0.3 on June. But be careful because 0.4 on shelter and transportation services 0.1, it's a step in the right direction, but still ticking higher. And probably this is why, after digesting the news, traders and investors are a little bit concerned. And we are seeing that on the markets. We are going to see that on the charts. But look at this. All items less food and energy. This is core. The index for all items less food and energy rose 0.2% in June. Shelter index increased 0.4% over the month after rising 0.6%. So a step in the right direction. But the index for rent rose 0.5% in June, and the owner's equivalent rent increased 0.4% over the month. The shelter index was the largest factor in the monthly increase in the index for all items less food and energy. So shelter is a big contributor for the core energy month over month ticking higher, still in the positive. And among the other indexes that were in June was the index for motor vehicles insurances that increased 1.7%, and apparel, which increased 0.3%. So be very careful with these kind of things, because despite the fact that we are ticking lower and pretty decent inflation data, this is better than obviously ticking higher. But I would like to see more progress and more progress on core inflation month over month, with these services being under control. Then we check the CME Fed Watch tool, and we can see still the same kind of pricing in of 25 basis points from 5.25 to 5.2550, and remaining there for pretty much 6 months until March 2024, in which we are pricing in an interest rate cut. It's still there, if flat or cut, but markets are still pricing in the same as before CPI data. That means 25 basis points in July with 93% probability, and then remaining there higher for longer, and not the two Fed hikes that they are advising and they are recommending and they are outlooking. So let's jump into the charts and see exactly how the markets reacted, because quite interesting day. This is the Nasdaq, and we were watching in the 2 hour, we were watching this descending trend line, this pretty much bull flag in conjunction with this ascending support on the daily with higher lows. This was a nice setup on the Nasdaq, the ascending triangle that also in the ES we were watching. But look at the ES. ES is stronger than the Nasdaq. And we are going to analyze that because this is something you have to really take into account. So breaking out, if we check the pre-market, we were yesterday finishing with a late spike, finishing in between these two levels, 15,250 and 273. We remain there in all pre-market, trying to go higher, quite choppy, and then we got the CPI reading. And don't get me wrong, these are pretty insane move. This is a pretty insane move. As always, when bullies holding ABCD pattern into the breakout, and this blue dot line that is last week high is super important for context today. We were just there into the open. We started chopping around, we tested the pivot low, and then pushed higher. But it wasn't like these big, huge candles that Nasdaq usually provides when momentum starts kicking in. But look at this, is quite with this. Look at this bounce of last week high. Pretty intense. This blue line is the high from the 16th of June, this rejection and this year-to-date high that we broke. So if we come back to that, we broke and we did this higher low and started rejecting that. This is a short setup. The peak, the breaking out of this critical level, the lower low, rejection, and then couldn't hold again and rejected this level. This is a pretty nice short setup, and as you can see, it really resolved pretty nicely. That's why I'm saying that today's price action was entering with a big gap into the open, and the inflation data is decent, but shorts are still there. And be really careful, because when gaps are this big and we are not confident on the data and we start digesting, price action can turn to be really bad. And as you can see, these candles and this continuation lower, this is better resolution to the downside that this breakout was after the open. We are still there, don't get me wrong, we are still 1% in the green, but the S&Ps really are holding above this pivot at 44.93. They are dealing with 4,500. That's another issue. 4,500 is right here. Look at these buyers down here. This was the first bounce of the 4,500, and then all these buyers, but the move is still there. Price action is not really clear to the upside. First, due to the gap, big gap, and then due to the core services and shelter being a little bit higher than I think people want it to be, and there's a little bit progress. And let's see how we end up today closing, because the close really will provide context to this setup in both Nasdaq and the S&Ps. And the S&Ps is pretty much stronger than the Nasdaq due to the performance on the banking sector. Look at this. JP Morgan, let's switch to the 5-minute. JP Morgan 0.88 in the green. Bank of America 1.50 in the green. Wells Fargo 1.17 in the green. Morgan Stanley 1.72. Goldman Sachs 2.24, and Citigroup 2.80 in the green. So let me recap, because earnings, it's this Friday, and oh boy, JP Morgan, it's on Friday, Citigroup is on Friday, Wells Fargo and BlackRock. And as you can see, they are really performing really nice on the week. If we check for 5 days, look at this into the earnings. JP Morgan, Wells Fargo, big double bottom, huge spike into today. Citigroup is also kicking in, and I mean XLF financial is 0.80%, and if we check the daily, we are pushing towards that level 35, and XLY is also pushing higher. So in order for you to understand what is happening, basically the Nasdaq is not based on bank stocks. It's only tech. So S&P is pushing higher due to the strong performance of banks ahead of earnings starting this Friday with JP Morgan, Wells Fargo, and Citigroup. So that's something to take into account, because I think the better longs were towards the S&Ps instead of the Nasdaq, and Nasdaq is really feeling the pressure of the shorts. There are a couple of levels that were broken today. These two levels into the pre-market, this one also, but this one is not really clear. This is the inverted W. This is a clear sign of rejection of basically a strong level of resistance, and we have to really be careful. We have to wait for tomorrow's data, PPI, and Friday consumer sentiment, and also the earnings of the financials, because I think when markets really need to digest today's economic data, and we have to really be patient in order to wait for more opportunities and for a clearer picture today. Dollar, it's quite weak. Look at this. It's below. This is a strong red candle, strong selling pressure, and it's at 100.56. So I expect buyers to really push higher, but as you can see in the 1 minute, there's no one. There's no. Quite interesting seeing the dollar this down. The 2-year yield pulling back a bit, quite a lot, almost 3%, and also the 10-year, since we tapped this SBB level at 4% in the 10-year, we pull back a lot, and we did the same in the 2-year yield, and we are pulling back a lot. This is helping the inverted yield curve to really push higher, but remember that we have still a lot of ways to recover to really invert the curve towards 0%, and there's nothing clear in the upcoming months. Interest rates are still going to be higher, at least 25 basis points. That market has it clear, but on December we are pulling back a bit, but we are not changing the picture. So inflation data today is really showing as expected, or perhaps less progress than we wanted to be, and we are going towards holidays. And on holidays we have crude oil spiking due to travels. Look at where is crude oil pushing. Crude oil will impact inflation for sure in the upcoming weeks and months into the holidays, because it usually spikes into this season, and also prices for restaurants, for clothes, for travels, for airlines. So despite the fact that today's inflation data is coming pretty decent, we have to really be careful entering into the summer, because most probably inflation will tick higher in these 2 months, and maybe it will. Markets will not wait for that, will not expect that. And that's why I think they are hesitating up here. One top, second top, third rejection, be really careful, because we are really not accepting the move higher. This is the line on the sand for me, at least, to continue higher. And last week high is not holding. This level, the blue dot line, is not holding. This is one of the levels I'm watching, and I'm also watching the first sign of rejection on the daily level, year-to-date high of this pivot. So that's my analysis for today. I think we got some decent news and moves. Nasdaq is overall quite in the green, but it's a little bit of a turn down to see this kind of pullback. And I think it's expected if you really analyze the data and analyze the patterns and the way moving forward. So be really careful and think about that. Last thing I would like to comment, Russell is not really pushing. It gapped up, but it's really, since the open, is really not moving that much. This was the open, since the open is pretty red. So nothing going on risk on. Bitcoin is also in the red today, and the only thing that maybe it's good for the overall economy, not for the risk on of perhaps some participants, it's gold pushing really higher. Gold is smelling the lower interest rates, at least on the terminal rate, and this descending pattern is just broken, and I'm really just changed this at least towards 2000. 2000 will be again the line in the sand, and copper and silver are also doing the same. These are good news for the worldwide economy, and it's pretty decent if you are trading this kind of metals and commodities. If not, if you are trading Nasdaq and S&Ps, take into account what I mentioned earlier, because we need to see the close of today, and we need to see the rest of the information tomorrow and on Friday. What we are expecting for tomorrow, we are expecting PPI coming in obviously higher than before, month over month. On May, it was minus 0.3, and we are expecting positive 0.2. And core PPI at least flat. So be really careful, because there's still a couple of days this week with economy data and also consumer sentiment. If we tick higher, let's see what happens with inflation and also the consumer expectations regarding inflation and 5-year inflation. So basically, we have to be patient still to really see what market end up doing. And I think that's all. You have to really be patient. If you have some profits after this, if you were short up here, congratulations. I didn't have the courage to do that. But if you did it, just that's a really nice setup, rejecting this level and just continuing lower in another leg down. That's why I'm kind of concerned about this level of last week high. So, and I think that's all from my side. Be really patient today. Don't ruin your week yet. There's still a couple of days ahead with news and data. So just be patient. If you found this video useful, please support the channel, give it a like, and subscribe if you like, because I upload every day, every single day, videos for market forecast, market updates, and market recaps. I appreciate your time. Thank you for coming up here. But remember that discipline and risk management are key for your success. A lot of setups today, quite choppy, but if you are in the red, there will be more opportunities for sure. I hope that tomorrow and Friday we can continue progressing towards the upside. And if not, at least we need some kind of confirmation of this triple top and change of trend. But we really need to see the break of these 2 weeks in the downside. Until then, right now or today, we are all in the green. So congratulations, bulls, and be really careful if you are trading this afternoon. Thank you, everyone. Stay safe and see you tomorrow.